Thank you, Mr. Vijay Srinivas, for graciously agreeing to conduct the session today on an interesting topic. Vijay Srinivas is a postgraduate in commerce and a fellow chartered accountant based out of Hyderabad, practicing for more than 20 years. He's also a certified information systems auditor by ISACA, a certified fraud examiner by ACFE, and an insolvency professional by IBBI. He has completed various certifications of ICAI, such as anti-money laundering specialist, diploma in information systems audit, forensic accounting and fraud detection, concurrent audit, indirect taxation, etc. He also has done a certificate course in cybersecurity. His services are into the areas of information systems audit, forensic audit, fraud investigations, fraud and risk management services, and data analytics. And he has provided the services to various banks, various NBFCs, microfinance NBFCs, and various listed and unlisted companies. He is presently Secretary of ACFE Hyderabad Chapter. He has earlier served as Secretary and Treasurer of Visakha Hyderabad Chapter, and also was a co-opted member of Student Skills Enrichment Board in the ICAI. He's a regular speaker for ICAI regional and central levels, training divisions of various banks, government departments, universities, etc., giving lectures and conducting workshops on banking frauds, Excel as audit tool, data analytics, and IT governance. He also runs 2 YouTube channels in the names of Few Minutes of Audit and 2 Minutes of Excel, sharing knowledge on IT audit tools, Excel analytics, etc. He has authored various articles in newsletters for ICAI Hyderabad branch on the use of technology in bank audits, information system audit procedures. We'd be happy to hear from you. Over to you, Mr. Vijay.
Thank you, ma'am, for a detailed profile, and also thank FDPPA for giving this opportunity. I'm an ardent fan of Navi sir. Wherever time permits, I'll not be missing any of the sessions. And frequently I do visit the channel of FDPPA to attend those sessions what you earlier conducted, which is always a kind of enriching in terms of whatever subjects you deal with. It's a kind of global platform. What I see, the kind of different people coming together and sharing their ideas, could be cybersecurity, could be data privacy, could be forensic and all. It's really good, and it's my honor to be present over here. And before I proceed with just a slight disclaimer is about the technology, because as I said, traveling, there might be a couple of technical glitches in connectivity, so kindly please pardon me. I'll be sharing my screen. So a normal disclaimer with regard to whatever the opinions I share over here, or for that matter, any tools, if in case I mention over here, there's nothing being endorsed by FDPPA, and there might be a couple of interchanging words in between forensic accounting and forensic audit. Though loosely they'll be used for common purpose, but they do have their own priorities and the kind of differences. So they might be interchanging. I might be covering both, because the kind of topic what you are dealing with, it's a global, it could be as an accountant, as an audit. So that's a disclaimer about this. Before we proceed with, let me just take up a couple of important aspects of forensic accounting in terms of definition and also the scope of what we deal with in forensic accounting. And as a definition, more or less focuses more on investigating with the technical skills of forensic accounting, and providing the report in such a way that can be used in the legal proceedings. That's the main purpose of forensic accounting, where the records, financial records, because as a forensic accounting, they expect expertise in GAAP, that is generally accepted accounting policies, and in terms of accounting terminology and all that expertise they look for. So obviously, you'll be considered as an expert when it comes to forensic accounting. Apart from that expertise in accounting, you are having specialized skills in terms of investigating and with regard to this particular subject. Now, obviously, the end use is legal proceedings. But if I take up the present scenario in India, we have very few such scope where we go through a legal proceeding where we have to present our report before the court of law. More or less, it has been used for a limited scope, wherein organizations trying to investigate some any embezzlement within the company, or maybe SEBI as a general procedure are instigating this particular forensic audit, or for that matter, there are mergers happening. And as I said, there is a loosely, this particular term is being used even for a due diligence. Sometimes they call it as a forensic because they want that kind of detailed reporting, though they may not be using it in the court of law. And let me just switch off my video also so that I can control the yes. So as I'll be using this fancy word where we say that financial auditing begins where accountancy ends. Traditional, this is what we've been hearing. So in that scenario, if I have to put the same phrase in terms of forensic accounting, where does it begin? Whether it is after the auditing or after the accountancy, or where exactly it begins. So probably we can say it starts even before accounting, forensic accounting, which usually tend to be even before accounting, in terms of saying that I have to go beyond the accounting entries. I mean, where it has actually started. What is the purpose of that particular entry? What was the intention? What was the the transaction requirement for the business? Why they have passed the transaction? Why it has come into the accounting records? So it might be a step ahead of accountancy, where it has to go beyond even before an accounting entry has. So we call it as restructuring, or we do a re-entry of that particular transaction, if in case the business requires that. If so, in what circumstances, what scenarios, and if it is required, whether it is done in a regular due diligence way or diligent way, or any biased kind of issue is there. Okay, so this is about a normal plain definition of forensic. Now I've just listed a couple of snippets, interesting forensic accounting. And before I proceed, even if you ask the definition of this forensic accounting, or you question what is the scope, or you question anyone, what exactly the main purpose of forensic accounting, and you question this to 10 different forensic experts, I can assure you'll get 10 different answers, because this is such a global subject, which depending on the scope, depending on the scenario, depending on the kind of assignment what they take up, it varies. The definition as per that particular limited purpose, it keeps on varies. So that is that's where it's still, you're seeing that this particular field is evolving. There is still open challenges, and even for that matter, not much of what you call procedures or policies have been drafted in this particular area. So coming to this, it goes way back to 1554 as per, of course, the Google search, and it might even certain places they have referred to ages of Chalukya in India case also, when it comes to the expert opinion of accountants. So this is one particular case of 1554 where a bookkeeper was presented for three occasions to give and testify as an expert witness. And the latest development where it actually picked up this particular is in 1817. Wherein a Canadian bankruptcy case was taken up. And Al Capone's is a famous tax evasion case, though he has made so much of underground smuggling and all that. He just came into light by virtue of a small tax evasion case, where it was investigated by one particular accountant called Frank Wilson. And that's where actual kind of forensic in the present era has taken its light. And more so, the forensic accounting term has been coined somewhere in 1946, and that's where the actual term of forensic accounting has started being using. And as we all know, the demand for forensic accounting started with the Enron scandal. And that's the first popular case which actually opened up the doors for accounting experts in terms of forensic accounting. And thereafter, various regulatory compliances have followed because of these particular financial crimes. Of course, Sarbanes-Oxley, or the so-called SOX, and all that. And thanks to FATF, wherein they've framed this anti-prevention, anti-money laundering rules and all, and there it opened up much more wider area for the specialists, because it goes beyond transaction, it goes beyond boundaries, it goes beyond the veil of any company and all. So that's where actually it has picked up its speed after the formation of FATF. I mean, the term has picked up more speed in terms of global. And the most interesting factor of forensic accounting, or for that matter, any financial crimes, is it just accounts to 5% of the total crimes across the globe. But when it comes to the losses, it accounts to 95% of the financial losses. That's the weight it carries. A single scam, we speak about Malias, we speak about Nirav Modi and all, you speak in only thousands of crores, of course. So the kind of quantum it carries is, the quantity is less, but the quantum is much more wider when it comes to this for financial losses. And that's where that's more challenging, because so many stakeholders are interested in your report as an expert, and that's a crucial challenge what we'll be facing as a forensic accounting expert. Now, where exactly it will be using, as I said, this is still a gray area, because not much of forensic reports have reached up to the court of law, except for special cases like Amrapali case, or maybe ILFS, or kind of those, or recent one as a JAL kind of thing. But otherwise, the purpose most of the time it will be for used for settlement or claim or an award by the court. That's the main actual purpose of forensic accounting. But later on, entities, like if it is a merger, they might suspect something, or particular stakeholder is interested in trying to get the beyond the veil, and they want to have a clear, transparent information about the transactions entered in that, then they might request for a forensic audit. And of late, right from 2016, when the IBC has been introduced, and that's where, because of these preferential transactions, or all those you call it a PUF transaction. So that's where actual forensic kind of assignments has picked up, where we actually do it as more of a transaction audit more than a forensic audit, wherein we have a limit of 3 years kind of thing. And second thing is to gain a trust. Obviously, someone is trying to invest, or probably any private equity is coming in. They want to have a proper, because if I call it as a due diligence, it might limit up to the regulatory diligence, or any regulatory compliances, or to an extent of any internal controls. It may not go beyond. But definitely, I want to go beyond to understand any issues which might come up in future post the merger. So that's where I might request for a forensic audit. And of course, formalizing a governance policy, as this is the intention of the management, wherein voluntarily they come up and they say they want to go for a forensic review of their organization and all the controls in terms of accounting, especially the transaction, how the procurements are happening, how what kind of controls they have, and role management in terms of approvals and all that. So that is a voluntary kind of this thing. Of late, the fourth one, the prevention of fraud, has been a very interesting. We have done a couple of cases. I fancily call it as a reverse forensic, for the reason that certain requests have come up saying that we are facing this financial crunch. So anytime any operational creditor or financial creditor might request, might approach an NCLT, and we might have to prepare for that. So in that case, kindly review our accounts and identify if any transactions are in preferential nature, or any such transactions which might attract section 45, 43, 45 of the IBC. So this has been a recent improvement, where companies, they are looking for various reasons, of course, and also to control future mishap. And this has been actually much more challenging, because for the reason that the scope is very exhaustive. I mean, we are not limited to a scope saying that no, a particular investigation has to be done, or it has to be prepared a report to be presented in the court of law. So no, the scope is much more larger, where they keep everything open, the data, accounts, everything will be shared, and they throw up a challenge saying that can you identify any mistake in that. And that's more very challenging, and at the same time it's very knowledge. I mean, it ensures that you are going beyond your learnings and trying to probably think out of box. It could be a very good learning as well. And coming to the actual financial statement fraud, the definition, of course, considering various definitions given by various entities or persons and all, it's more or less is about a deliberate misrepresentation of the financial condition of the enterprise, accomplished through intentional misstatement or omission of amounts, or disclosure in financial statements, obviously to deceive the statement users. Now, the terms which are highlighted in the bold are also the terms which challenge the forensic assignment, for the reason that to prove a deliberate misrepresentation, or to prove an intentional misstatement, or to prove that there is a deceit in the given statement, obviously I have to approach IPC or CRPC legally, and the kind of sections 420 or any kind of sections what they mention to establish this particular term in terms of the requirement of IPC, that's where more challenge, because not just the Evidence Act I'm mentioning about, the definition itself, how I can relate this financial aspect in terms of misstatement or misrepresentation with the section where I can probably get the culprit convicted and all. So that's where the more challenge is. As I said, probably at the end, I'll speak more about the actual challenges, what we'll be facing in forensic accounting. So coming to different financial frauds, of course, ACFE material has published this particular, the various financial frauds. You speak about corruption, we speak about asset misappropriation or a financial statement fraud, various kind of frauds. I've just listed those kind of frauds over here. One second. Is this a message? Okay. Now, why actually to speak about the practical aspect of this particular financial statement fraud, depending on the kind of scope. Let's say if a banker has given this assignment to perform a forensic audit, obviously my view will be in the in concentrating on the working capital requirement, where I'll be looking into current ratios. I'll be seeing that whether the inventory is overvalued or undervalued, what is the composition of debtors, what is the composition of creditors, and whether they are excluding any related party creditors or including any related party creditors, excluding any debtors, kind of thing. So depending on the scope, the criteria of selection might also vary in terms of financial, because of course, just to share a little idea about this particular forensic accounting or forensic audit, various experts will have their own approach. I mean, there is no scientific methodologies are there, scientific tools are there, scientific what you call process are there, but the methodologies might differ depending on the experience a person has in the given field. Like say, for example, if in my case, someone asked me to perform a financial forensics review of a financials, they provide me respective ERP backup or kind of thing, and they want me to review that and come out with any kind of issues what I identify. I may not directly get into the financial statement. I may not ask for the balance sheet, P&L, audited, and all. My approach might be, I want to construct financial statement based on the data provided to me as per my regular training and all, as per the regular accounting policies and all, or Ind AS kind of thing, and then try to compare with the financial statement audited and provided by the company. And I'll try to concentrate on that area where there is a mismatch. Maybe it could be 5% or above or 10% kind of, whatever benchmark you have with relevant to the given industry. I mean, hospital, I might have a benchmark, or infrastructure, I might have a benchmark. Based on that benchmark, I'll compare the financial statement I had prepared from the given transactions with that particular, and the area which there is a difference, and that's where the area probably could be a difference of opinion, or it could be one actually which is being stage managed. So as I said, this might be my approach. It may not be with others. Others might take up a directly financial statement, go with the audit remarks, go with the director's what you call replies to the audit qualifications and all. And from there, they might pick up their kind of triggers. So it depends on various this thing. And again, it comes to the kind of exposure what you had in the relevant field. Accordingly, the scenarios might change. And what are the basic reasons for which we come across this kind of frauds? I mean, what are the main reasons? There could be, like say, could be to encourage investment through a sale of stock, or to demonstrate, in case of earnings per share, they want to increase the dividends and distribution payouts. I mean, the ratio of dividend distribution payouts, or to cover the inability, especially in the banking. Interesting case studies where usually what happens in case of bank compliances, monthly a particular entity who has taken a facility, could be working capital or OD, they'll be providing the stock statement, debtor statements and all. Now, they'll be providing it in a printout, a regular printout, and unfortunately the format what they follow is not in compliance with the RBI. RBI has said that they have given a format saying that you have to exclude obsolete stock, you have to exclude the what you call debtors which are not paying, I mean, a write-off debtors kind of thing, or bad debts kind of thing. then come out with the actual working capital requirement. Of course, after discounting ratio of 25% or 40%, depending on debtors or stock. But of late, what we have seen is they give it in a paper where they take a printout and they follow their own regular format. They say sale, they say purchase, they just give a stock, debtors, creditors, and all. They don't give cost of goods sold, they don't give consumption details in a proper format. But even if those printouts, what they give, you put all the 12 months of printouts in an Excel and you try to compare with that particular information provided in Excel. And you compare in such a way that you bring out your own ratios, like say stock to turnover or consumption, cost of goods to turnover. You prepare your own ratios and you will be surprised to see that the ratios indicate that it doesn't require a working capital considering all the 12 months, if you take an average kind of thing. Or for that matter, there might be sometimes a negative margin as well, wherein in a CMA data, so-called credit monitoring agency report, what they give initially while applying for a loan, they would have given a fancy figure saying that in the next 5 years, my turnover will be like this, and this is how I'm going to serve the debt and all that kind of information. But if you compare that CMA data with the actual statement, what they provide, there might be huge difference. That is one aspect. Second, when you work out the average of ratios over a period of those 12 months, you might be seeing the surprising figures, which either it indicates that the company doesn't require a funding or is completely in a financial crunch, which he may not be he may not be in a position to repay back the loan. So both the scenarios, if I'm just reviewing the financial a printout, it may not be possible unless I put those figures into an Excel and do a comparative analysis. This is, I'm saying, in a regular scenario of a concurrent audit or a statutory audit. It doesn't even require a forensic kind of thing. Now, when it comes to forensic, obviously, you'll be using all those techniques. That is one area where you can know the reason behind these people trying to commit a financial crime by and to avoid, of course, even ICAC and high purchase prices. They have to receive high purchase prices for the acquisitions, especially when they go for any takeovers kind of thing. Obviously, they want to get more higher prices. They might get into this kind of preferential transactions where they escalate kind of values of current assets, or for that matter, fixed assets, whatever. And to meet certain goals and objectives, obviously, they said, next 5 years, I'm going to reach this particular position in the given industry. If they are not happening in a real way, obviously, they'll come out with a fictitious way where they probably manipulate the figures to at least say that, no, they have reached this particular goal, and probably take benefit of valuating the company in a higher way and probably get the benefit out of it. So these are the various regular things. And this in terms of a global, an organizational level. Of course, I'm leaving apart the regular payroll frauds or what you call vendor frauds or an internal kind of frauds committed by the employees. And those are all the other respective aspects apart from this organizational level. Those are very regular kind of thing. And we come across certain cases where club wants us to perform a forensic audit because there is a manipulation in the membership fee kind of thing, or there could be a theft kind of thing. So those will be the respective other cases apart from the organization level. Now, coming to the here, apart from this, this is the development of IBC when it comes to the forensic assignments. Especially in IBC, you have these 4 different transactions which requires an expert to perform a transaction audit, which it requires him to go back to 2 years prior to, or if in certain cases, of course, usually it will be 1 year prior. But if they suspect that if they have an indication that the related party transaction, it gives a time scope of 2 years also. But this is as per the procedure. There is no hardcore saying that, no, you should restrict yourself to 2 years. I might go even beyond, because if it is a fraud, there is no such limitation of 2 years kind of thing. So depending on that, if I come across a situation that there is a clear-cut fraud, a fudged document kind of thing, I might even go beyond that to identify, obviously, to get collaborate all the evidences to prove that. Now, what exactly is this 4 different is? One, of course, you have preference transactions where they are giving preference to a particular creditor while transferring a property as in to clear off the financial debt, where the preference is given in such a way that the creditor is getting beneficial. So what they usually in IBC, what they do is all these transactions, they'll reverse it as if it hasn't happened. And accordingly, they'll try to restore the financial position as if the transaction hasn't happened, so that they can do justice to the other creditors who have been doing genuine transaction kind of. That's one preference transaction. Then you have undervalued transaction, where actually the transaction cost is something usually we call it as even if it is for related party, it has to be in arm's length, a fair value kind of thing. So obviously they might have undervalued in such a way that they give benefit to that related party. And here again, you have a limitation of related party and non-related party. That is another transaction which requires so-called forensic audit. And section 66 of clause 1 and 2, it speaks about one, of course, fraudulent trading directly, where to defraud the creditors. Second thing is wrongful trading, which indicates that the mens rea, the purpose, the directors have acted diligently to defraud someone. They have performed this particular transaction. So that is these are the two aspects when it comes to the fraudulent trading kind of thing. The last one is the extortionate transaction, where you have terms requiring exorbitant payments to be made to the corporate debtor. To that particular creditor, which is obviously something relevant to a preference kind of thing, but it goes beyond as well. Yeah, I'll definitely come to that. I just thought because I'm not sure what is the composition of the members, so I thought first I'll make them understand the scope. Then I'll share a couple of interesting aspects I've come across in my trading or investigation. Okay. Now, what kind of techniques and tools what we use in forensic accounting? There are quite a number of. Very few firms use automated tools because initially they can run to identify the triggers, or probably based on certain triggers programmed in, they'll identify the population which has to be sampled, or all those things, where exactly they have to concentrate and all. But otherwise, more better way is to perform yourself. Apart from the tools, perform yourself what kind of benchmarking. Now, when it comes to benchmarking, it could be periodical benchmarking or a cost center wise benchmarking, or even for that matter, comparing this particular industry with a regular, like say, if I'm taking an infra company, I might have my own client as a chartered accountant. So I know what kind of ratios an infra company will be having. So if a forensic assignment is received from another infra company, at least I'll have a comfort of having a benchmark saying that, okay, this particular area, maybe in terms of works contract, or maybe in terms of a land price, there might be chances of manipulation. So that benchmarking again comes back to the expertise what you have in the given field, or other matters, other things what industry benchmarking are available in the global website or whatever. Then you have exception reporting. That's a regular tool where you generate your exceptional reports, where apart from the regular norms, the way what kind of areas what it has deviated. And ratio analysis, that's been very important, because as I said, banking, I might be interested in current ratio and debt coverage ratio. And if it comes to investigation of maybe any investment kind of company, I'll be probably looking into a capital expenditure kind of thing. So depending on that ratios, of course, those are all, as I said, these are only leads. May not be, all these will not form your conclusive evidence. These are all the leads or triggers which will help you to reach towards collecting those required evidences to establish that particular fraud or whatever. Okay, and these tools will be helpful, definitely, obviously, to get into that particular. System analysis, obviously, it's also very much important, because most of the data what we get is in digital form. We get the data from GST, we get data from income tax, we get data from corporate affairs, Ministry of Corporate Affairs, we get data from the regular, otherwise company anyway. So we can probably compare these four, seeing that what they have declared, and we have the fifth data where they have provided to the bankers. So unfortunately, we have come across cases, and for that matter, even Institute has initiated disciplinary proceedings on those members as well, where there's a different statement provided to regular stakeholders and a different statement provided to the banker. And both the cases, he was the person who has attested. So in those scenarios, the system analysis helps to compare the various financial statements and to form what exactly what they have projected, the relation between all those statements. And definitely, if there is a mismatch, that will be a very good evidence for you, because already they have declared, they have attested and uploaded in the income tax website, GST website, and that's an evidence where they said they've given their statement. It works as an indirect affidavit kind of thing. So once you have that, you can easily present your analysis saying that, no, this is the mismatches, and obviously it shows an intention of management in manipulating that. And regular tools like we use Benford's law. Benford's law, of course, nowadays even we started using in the regular audits also, because very good tool to identify what kind of sample I should be looking into. And the other things is Benish model or correlation regression analysis of any kind of ledger, could be sales or turnover, whatever it is. And coming back to the kind of what you call offenses, what IPC has mentioned, and especially when it comes to financial frauds. And IPC, it's been more global because we have other sections like maybe 107 also, where instigate another person to commit a fraud. So it could be applied to even the directors, where they are requesting an accountant to do past certain entries. They may not be directly hitting this particular area, but I'm saying global chances of other sections also coming into. Otherwise, you have section 405, which is a criminal breach of trust, and 406 punishment. Of course, I'll be circulating this presentation just for the easy reference and everything. And 409 is a criminal breach of trust by a public servant or by a banker or a merchant or an agent. And 415, a very important section when it comes to cheating. And personation, cheating by personation, you have punishment for cheating, 416 to 418, and we have 420. Especially which is meant for dishonestly inducing delivery of property. And yeah, for forgery of valuable security, 467, forgery for purpose of cheating, 468, and forged document or electronic document, 471. This again, probably Navisar is the best resource when it comes to this kind of thing, where 65B and all that expert opinion in terms of document, digitized document and all that stuff also plays important role when it comes to forensic accounting, because somewhere or other, that may not be a direct evidence what we will be getting. We have to extract from a digital device. So that plays very important to get an expert opinion on that. Maybe as a forensic accountant, I may not be qualified as an expert opinion to certify a digital data. So there I might look for a forensic entity like Gujarat Forensics and all. And that again depends on how they are presenting that particular expert witness. And Companies Act by itself has it. Companies Act 2013 has been I mean, what you call very complicated. I mean, they've underdone. I mean, they've what you call 1956 Act was having very limited aspects when it comes to punishment of fraud and all. That fortunately for all the cases what they've come across up to 2013. They have included this 447 section is very important. And not only that, they have also defined this SFIO, that is so-called Serious Fraud Investigation Office. And of late, all the cases what we come across, more or less, they started landing in SFIO office. Even if it is any like just to refer one recent cyber, what you call celebrity case also, where there is an involvement of certain financial transactions, that also has landed in this case. So this is one section, especially when it comes to this thing. And you have regular other sections like section 36, 38, 229, 251, and false statements 448. As I said, the benchmark in terms of this financial frauds or financial crime investigation has come by FATF, wherein they have introduced this anti-money laundering. And India also has this particular Anti-Money Laundering Act, Prevention of Money Laundering Act, where section 4, it provides for a rigorous imprisonment. And apart from that, this is only where directly they provide in Prevention of Money Laundering Act. Apart from that, it has Money Laundering Act has referred to all those sections of various regulators wherein it can initiate proceedings as per the respective regulatory section, which has also been brought into as an annexure of Prevention of Money Laundering Act. Now coming to the challenges, and this is where probably I'll share a couple of my practical exposure in terms of what kind of basic challenges. See, when we get into this forensic accounting, the first thing obviously will be relevant, we'll be looking for the kind of data what they provide, what kind of data, especially if I'm going into what you call IBC kind of thing, I have to review at least 2 or 3 years of data. Or otherwise, if it is in merger and acquisition or kind of investment by a private equity, private person, they want to perform this forensic audit. So in that case, I might go beyond that. Now, when they provide, obviously we take a declaration affidavit saying that this is the data they provided. Obviously, unlike in audit where they allow us to review the ERP on our own. So most of the time we request the reports to be generated. Then we take an affidavit saying that this is the data which is being generated from so and so ERP, which has so and so timestamp. Excuse me. So and so's timestamp and all that. Also, some entities, as I said, where it is a reverse forensic kind of thing, where the entity requests you to perform a forensic audit on their entity to identify any kind of manipulations happen. They're even more challenging because they throw up the entire system to you, providing access to the ERP, and you have to access, go through the entire ERP, extract the data. Now, the main challenge is you will have ample data, vast data. Now, how do you, it creates so much of what you call excitement, or you call the kind of data availability. So sometimes you might even deviate from the regular, because you come across many important issues in the financial statement, which might dilute the scope to a certain extent, also probably deviate you from the actual scope. Say, for example, in a particular case, when we were investigating, we come across certain flight ticket booked on one of the topmost political leader of across India, one of the topmost political party. Okay, and like this, I mean, we come across, I mean, these which they don't have any relation, and that's been a regular kind of flight ticket booking happening in those accounts. Now, in this scenario, it creates so much of what you call a zeal to understand why exactly they are doing that, and it might even land up deviating from the regular scope kind of thing, and you might even go beyond or get into the different mode than actual what exactly is required. So that is a challenge what you'll have, where you have vast data and you have to identify what is the scope and what is the required data and pull out that to perform your activity. That is one. Second could be the data itself is limited. I mean, you don't have, they say, no, this is what we have, especially in small companies, in Hyderabad based company kind, where it has gone into insolvency, where the data is very limited, and the kind of entries they pass is a consolidated entry. Like say month wise, they have 300 vouchers and they split into only 20-30 vouchers. They put all those entries into one single. So that is more unstructured kind of thing, and also very limited data. And within that, you have to again structure, collate all those information in a proper form, then come out with your report. That is more like inadequate kind of data. That is one aspect. So here, as I said, one I already mentioned one kind of challenge, where we get this kind of data provided to us. Second, we have come across cases where they have provided a system to perform, and obviously a system drive has a particular path where they have stored this particular backup of any accounting package, and we come across saying that not just one backup, they are having 3 or 4 different kind of backups for the same financial year. And obviously, I can't say that, no, I'll go with the audited financials, the backup which is matching with the financials, because obviously when it comes to forensic, it has to go beyond to identify any manipulation or the intention behind that party passing the entries and all. Now, when we come across, it becomes even more challenging to convince, saying that, no, this is what, and obviously we can't limit. I can't I can't avoid mentioning my report saying that they've provided a system for review, and I've reviewed this particular backup out of 10 backups. So that is one more challenge what we have faced this thing. And the third thing, more crucial, I'm not sure, of course, this is just a closed this thing. When it comes to IBC, we have tremendous pressure from creditors, especially banks and all. Because obviously, if something is identified, it might hit upon the employees of the bank, because if I have identified a particular transaction which is a fudged or a cooked up transaction or arranged transaction, and obviously they would have given approval for making a payment. So if the report comes in, the banker also will be in a problem apart from the corporate debtor anyway. So you have a tremendous pressure to come out. Obviously, of course, we have to stick to our ethics and report whatever it is. It's up to them. Probably you would have come across news where you resolution professional has faced threats or sometimes even kidnapping also, because no, you, as I said, no, very confidential data you will come across, and you can't stop yourself reporting those. Now, in such scenario, that's one kind of challenge what we have when we have access to the data. And one case is when it comes to data, there is one export-import transaction which we have come across. The import was happening from Singapore, and an export was happening to Dubai Free Trade Zone. Now, in that scenario, can I depend on the opinion? Because obviously we have sent a confirmation mail to those respective entities requesting to confirm those documents, and they have said that out of these 10 documents, only 2 are genuine, other 8 we don't have in our records, so it could be fudged kind of thing. Now, can I take that as an evidence, the confirmation sent through mail? That is one limitation what we have, and I can't go beyond boundaries to get investigate the documents what have been produced. I mean, it could be a fudged as they have confirmed, but I can't go beyond boundaries to get that. That's a huge challenge what we face, especially the cross-border transactions are one done overseas when it comes to the data. Now, coming to the legal challenges, this is the vast. I mean, that's where probably I don't see a proper arrest happen, or probably a punishment of a proper punishment have happened. Even if you take Satyam case, Institute has taken action on the respective chartered accountants, but the guy is still out there. I mean, he's performing his own activities, having his own company. So the problem here is when it comes to this expert opinion, it's always a third-party opinion, and it can be challenged because obviously it's an opinion what he has given, and unless there is a proper reasons forming an opinion, it's also allowed to be cross-examined by the adverse party, and also the expert is part of that particular witness. That's one challenge what you have. And once someone orally contradicts that particular evidence, it again comes back to zero, where it should be only tallying, it should be tallying with the primary evidence, then only he can take. If someone challenges it, again, that will not be considered as an evidence. And as I said, the other challenge 65B is anyway I have, and I'm just referring to that particular case, Ram Narayan versus State of UP, where the Supreme Court has mentioned about these particular points. And again, there might be a conflict of opinion also. As I said, techniques might be scientific and all, but the approaches might be different. Based on the approaches, my kind of opinion might be different. My kind of reporting, at least crucial data is fine. But when you speak about two different this thing, the expression should be same. I mean, someone may not be expressing saying that director should be held responsible because they are behind the decision on that particular transaction, and other report should not say that accountant is the culprit because he is past this thing and the minutes have been properly accounted. So there's a conflict. Obviously, both are mentioning about the same fraud, but the kind of opinion is obviously there is a conflict. And in such scenarios, the court can have its own opinion form, but that's again a challenge to the forensic accounting to justify his opinion. Now, the main underlying point is evidence is based on the primary evidence and not based on system-generated data available with the forensic expert. Now, this primary evidence itself is a challenge because when it comes to forensic accounting, we speak about the entries passed in the system. We speak about the invoices supporting those entries. We speak about the agreements supporting the entries. We speak about the resolutions and minutes supporting entries. And I have to prove that those have been initiated by the company, attested by the company, or within the what you call control of the company. Now, unless I prove all these factors properly, I can't justify it as a primary evidence. That is the greatest challenge what we face, especially in a court of law. And the second most risky thing is, while we present this report in the court of law, obviously the court proceedings is nowadays public. All those orders are being published in the respective court websites, or otherwise media is also interested in taking up the reports and publishing. Now, the confidentiality is much more important because if I'm presenting a report, I also should take care of how I'm drafting my report, how technically I'm drafting, and I'm ensuring that the actual confidential data directly may not be, of course, I might be giving it as an evidential documents and all by sequential numbering and all, but somewhere or other I have to speak out in a court of law, and that becomes more risky thing because there is a loss of transparency, and exposing the ethics of the company, exposing other things. If it is not against the company, if it is they are not convicted, in that case, it turns out to everything turns out to be on the forensic accounting in terms of defamation or whatever you call. So that is the greatest challenge of forensic accounting, where you are presenting your data before the court of law. Now, the third thing is, unlike in a regular civil cases or criminal cases where plaintiff and respondent, one is a beneficiary, one is a victim, and there is a straight coordination, straight what you call representation of the parties. But when it comes to forensic accounting, who are the actual victims? Whether the stakeholders, the public, because a case is being run against the company by a creditor or by government of India, then the directors representing, obviously they are directors. They don't have the pain, obviously, unlike the stakeholder who actually is a victim of that thing. He is not present. He is not presenting his pain before the court of law. And in that scenario, it becomes so challenging. And that's where I feel many forensic cases haven't taken actual further step, because the parties doesn't have that kind of interest in the case, where they don't find any benefit out of it, and they're not actual victims of that particular financial crime also. Now that's another reason, another challenging aspect, especially when you have the organization representing the forensic case. And as a forensic accounting, you have to consider that, because forensic accounting, just like any other profession, it has to carry that moral and ethics and a little more percentage, because someone has trusted you, or someone is trusting you as an expert, because it's not a general subject where anyone can understand. So they're requesting and they're trusting you to provide, and that's where it gives more responsibility to have an ethics and a kind of integrity, high standard of integrity and all that. And the fourth one is, we don't have proper recognized forensic accounting standards. Of course, ICA has of late released a couple of standards, and Canadian accounting regulator has released that. But per se, unlike you have IFRS, you have other COSO or ISO, likewise, in terms of forensic accounting, we don't have global proper standards. So that is one thing. Unless those comes out, probably it might be not say such a smooth run for a forensic accounting. And the fifth one is the right selection of forensic accounting, because when we speak about forensic accounting, especially expert, whether you look for a chartered accountant, or whether you look for a chartered accountant who is having experience in forensic audit, or who is having a qualification as if ACFE and all, what kind of combination you look into, what kind of right education, what kind of right training, what kind of right experience. And apart from the rigorous impartiality, you have high integrity, high competency, and again the fair cost. Because when we speak about forensic bidding, you see a good number of zeros in the bid value. So all these, what kind of right combination I should go into when it comes to forensic accounting, and that's been a great challenge for any organizations and all, if they have to proceed with that. And the scope, again, see, we have come across one particular forensic assignment by SBI, just to name. And nothing has been excluded, not only financial transactions, it has gone beyond. I mean, it's a global scope kind of thing. I mean, in that scenario, it creates so much of confusion. I mean, you can't just think of a particular procedure to address those kind of scope. No, they should be having a clarity. Those who are giving a forensic accounting assignment, they should be having a clarity about what exactly they are looking for from the given entity or data or corporate data or whatever it is. So accordingly, maybe ancillary scope and all, that's a secondary, but you can't have a primary scope, which is an exhaustive kind of thing, which may not serve the actual purpose, which might even take time and all that stuff. Okay. And the last one is people started using this forensic accounting as a partial services. I mean, they say you only review the data part, other things you don't touch. Now there, obviously I can't stick to data, because I may come across a related party who has also provided purchases. I mean, who is also data creditor. There is an offset of transactions, who might be an employee of the company, or you might be having some other interest in the company. And I just have to report to that a particular extent and nothing beyond. there is one partial use of services, also one challenge. And of late, the kind of terminology what they started using, forensic accounting, forensic audit, is they've been used loosely. I mean, even if a small due diligence activity, also they started issuing a appointment letter saying to perform a forensic audit, but this is the scope, which is more like a due diligence. They say, no, you verify the corporate records, you verify the income tax records, the GST records. These are the scope within this, and the term what they use is forensic accounting. And of course, it doesn't have to, because they already have your scope, but that sometimes creates so much of an ambiguity or in taking up that particular activities. Now, what I'll do is I'll share a couple of reports, not exactly the entire format of reports. I'll just share just to give a fair idea. This is one forensic report. The kind of format what we follow is we have to, of course, as I said, depending on whether it is being produced before the court of law, again, the kind of formats, the summary what we give, that might be different. But overall, the report will cover the actual background of the particular audit. What kind of, let me just zoom a little. And what is the period for which we are conducting this audit, the scope of forensic audit. More important is methodology and approach. I have to document what is the method I've used, what is the approach I've used for the given consent forensic audit. And of course, I've given the brief profile of the company, what is the composition of the board of directors as on the date of appointment, and about the synopsis about the audited financials and what kind of exposure they have. And what are the key findings what we come across. And of course, these key findings will be depending on the scope what they give. I mean, they will say, as I said, no, this particular scope speak about end use of funds, infusion of equity or data, revenue from operations. And these are the key finding and observations where we give a detailed observations along with the supporting annexures based on which I've arrived at the observations. And sometimes management, as I said, if it is a reverse forensic where the organization is requesting you as an expert to review and give an opinion, that I might even suggest the controls on that, based on that, what we have. And the conclusions is where we report, as I said, depending on the scope. And just to give a brief about the conclusions, we don't conclude saying that no, there is a fraud or there is a manipulation or there is a what you call a transaction. We can't directly comment on those things. I just review saying that, okay, there is no substantive corroborative evidence to prove that particular thing, or to certain extent, there is a, as you can see, the fourth point is 70.20 crores, 70.2 crores were opened in favor of related party, or there is a letter of credit by routed through funds back by using discounting facilities, so and so 149. And with regard to bank guarantee, there is some 77.3 crores with regard to advanced performance. And trading sale, there is a substantial part of revenues. And so these will be in terms of accounting parlance only, but we'll be highlighting that, we'll be quantifying that, and we'll give an opinion saying that, no, why I am considering that particular point as part of my report. What is the reason behind that? Like if I say routing of sale transaction amounting to 321, other than the accounts maintained with the consortium lending and so and so, so and so. So this is one particular form of report. And I'll also share the famous Amrapali case forensic report, because if you see, I just give a fair idea about what kind of analysis, what kind of areas they might look into. As you can see, with regard to one particular party, they have arrived at a conclusion saying that, no, this is a cooked up transaction, because the vehicles which are coming in and out after loading 30,000 cages, it just took 5 minutes, depending on the time in and time out. So that means that receipt, the Kanta bills or whatever bills have been forged. I mean, they have created, I mean, not actual things. So this is one they have mentioned in this particular report. Likewise, they have also mentioned how the related party exposures have taken place, bogus expense and cash surrendered in income tax search. And so, as I said, this being presented in the court of law, they have been in detail. Of course, this is all again supported by the evidences what they have collected, and double account booking expense, unsupported cash payments, all those kind of things. And this report is, of course, available in public domain. Otherwise, I can share it with the group, not a problem, because it's just available in the public domain itself. Now, with this, I'll conclude my presentation, and I'll keep myself open for any kind of questions or discussions. I believe, I'm not sure, because what I've learned is we'll have a 1 hour presentation and then we'll have a discussion on that. I mean, at least going by the other sessions what I've attended, that's been so I'll keep myself open for any questions or any kind of discussions. I'll be much more happy to be participating. Manju ma'am.
Thank you, Vijay. We'll start with that question Mr.
Yes.
Dr. Limay has asked. It is in the chat box.
Yes.
In cases you investigated, how much role a CA or financial advisor has played?
See, CA, as I said, this is the scope of an accountant. Obviously, as a chartered accountant, he being trained in the field of accounting, he being trained in what you call drafting the financial statements. So he knows how the financial statement is being constructed. So by virtue of that, he can also reverse construct, saying that, no, if this particular ledger is being displayed as my part of my financial statement, how it would have started. Like, say, for example, just to give one particular example, usually in a bank, as I said, I'll be comfort having a current ratio, of a very good current ratio. To maintain that, obviously, you have out of current ratio, you have current asset and current liabilities playing part. Now, if I have to give a healthy current ratio, either I have to have current liabilities reduced or I have to have current assets increased. Now, as an accountant, as I said, one particular case where we come across, there is a current asset. Usually you have working progress is also part of your current asset. Now there is a capital working progress where they have included as part of current assets, and the parties to which this particular capital expenditure has been incurred, because they have included this, they should have actually included that also part of their current liabilities. But going by the nature saying that, these are the capital creditors, they've excluded that and placed it in other field. Now, because of that, what happened, that ratio has overshooted, and whereby it said that there is a requirement of current, there is a healthy current ratio kind of thing. Now, this can be possible because if I just learn a normal accounting or about the balance sheet, I might have only certain idea, but being a CA or being a person who is trained in accounting, could be even a become with very good experience of 5-10 years of accounting this thing. So there he can reconstruct or probably go back to the particular transaction, identify what exactly this transaction should have been accounted as than actually what they have done. So that's the advantage a financial advisor or a CA has. In fact, a recent report where it said more of financial frauds have been unearthed by the financial servicing companies or financial entities, for the reason that the person who evaluate those are obviously those who are maybe MBA finance or CA who is having very good exposure, and because by virtue of their experience, they're in a better position to unearth those frauds. That's one. Do you face any regular bottlenecks, constraints in the process you follow in audit? See, as I said, especially yes, IBC, definitely there are bottlenecks and there are many constraints because no one is satisfied with your report. Not the corporate debtor, not the creditors, not any of the employees, stakeholders, whoever it is. No one is happy. And that's the main challenge because you're trying to put all those facts where everyone will be affected. I mean, creditor or corporate creditor, because they might be happy saying that, no, this transaction is being reversed and the creditor has been getting a proper fair share. But the person who approved that payment is the corporate creditor itself, the creditor itself, the COC who has approved the payment to a particular vendor. No, they might question saying that how you have approved that particular transaction, how that it has been unearthed in a regular this thing, and wherein especially we come across an evidence where is a fudgy document, what you due diligence you have performed while providing that payment. So it comes back to the banker. So he may not be interested in that. Not the corporate debtor, because obviously that will adds up to the credit debt to whatever he has, because they'll reverse the transactions. So that is the main constraint what we have. Second is the legal constraint. Of course, all the evidences, as far as it doesn't reach court of law, you're fine because you're just being an expert and giving your opinion fairly. But when it comes to court of law, you have to be a step ahead. You have to become an advocate. You have to become by yourself a jury where you collect all the evidence where you can justify this thing. That's a second. The third one is the staff constraint, because you being a forensic audit, your perception, your experience, or your kind of knowledge might be different, and you might entrust certain scope to your staff. Here you say that, okay, you do analysis, you identify these things. And again, how much of expertise he has and how much of training he has undergone, And I obviously I can't do entire thing on my own. It has to be a proper team as well. So that is the third constraint what we have. Definitely it's a constraint, and probably we can overcome once we come across certain proper standards being drafted, or a clear scope has been assigned to the assignment. And also I mean, someone is eager for a report. I mean, they want your report. Unlike, as I said, no one is interested in your report. No one is much fascinated about your report, unlike that, someone is really interested, and that gives more scope for you to take up those challenges. Hope I've addressed your query, Namit. Thank you. So otherwise, any questions, ma'am?
Any questions, any comments?
Thank you, Kamal.
Vijay. Just wanted to throw in not a wobbler, but
yes, please.
Your thoughts on particularly. I mean, so how? First of all, thank you for the lovely presentation. Took me back to my work in the police. Luckily I'm out of there.
Okay.
But just wanted to know, what are your thoughts on the cloud accounting system and the audit trial of forensics?
See, cloud accounting, to a certain extent, I might be more comfortable for the reason that you have a proper agreement in terms of the data what they share. Because when it comes to cloud, we request not only the data, we also request the what you call the IP timestamps. I mean, from which particular IP the particular data is being accessed during that particular period, and who is the role assigned for that, who is the person responsible. So you'll have more, because when it comes to the regular local storage, again, you are depending on the data what they provide, but you have a data provided by a third party where it is being authenticated with a proper documental support. And also you have a proper timestamp to establish that, okay, this entry has been passed by so-and-so person from so-and-so IP. So this is the comfort actually in a fintech company where we have done audit, that it has created so much of comfort by virtue of they are having a data in control as. So that given more comfort in terms of establishing the evidence of the transactions what they have passed. So that way, I think that's not a challenge. In fact, that's more of a blessing in disguise. I mean, you have more comfort if someone has a cloud.
Sure. Would you follow up particularly the during the investigation or anything like that? Would it be your greater interest to look in what IT has been doing during all those months leading to somebody coming in to do the forensic audit?
You mean information technology, if I'm addressing correct, IT in the sense?
Yeah, in sense like the people who are leading head of IT departments, and
Yes.
their department, because they have a much more clout in what they can and cannot manipulate. I mean, I don't know.
Yeah.
So,
Yeah. Basically, when in a proper ERP setup, IT has a limited role in terms of setting up the controls, or they don't get into actual ERP coding, because ERP coding is done by the person who is providing the service provider, like it could be Finacle, or it could be a SAP, FICO, or whatever. IT people will have a limited, the controls in terms of giving accessing rights, or providing who can access it, what is the time period, and all that stuff. They don't per se get directly into transactions, because in a proper ERP you have a modules, an approval system, a proper transaction processing system. So you can't override, because that if I have to override, that has to be done in a coding, and coding is being done by a service provider of that particular ERP. So of course we have come across one particular case, as you was mentioning, a GST being masked. I mean, they put a program saying that in excess IGST in a given month, if I'm saying that my average IGST is 1 lakh, so they worked out a particular mask code wherein they said if it is excess of 1 lakh, that particular has to be split into CGST, HGST while generating a 3B. So what, especially ITC. So while running a report, I get a report. So as a CA, I'll be just trusting the report what a particular ASP has generated, or a particular tool has generated. But if I go beyond, this particular case has come up by virtue of a GST investigation and done on a hotel in Hyderabad. So there the programming is done. So there again, it's not the role of IT. It's again the service provider who is the culprit who has made that. So IT has a very limited, because they have the controls in terms of what are the roles, from where we can access, what is the timelines where they can access, and all that stuff. So that way, especially when it comes to financial crimes, they have very limited role. Of course, they might be involved in saying that a particular guy who is having a privilege of data entry, they have given a privilege of a partial admin kind of thing. They modified that role for a limited period where he can modify an entry. So that again, we'll get in a log where this particular role has been modified from data entry to admin for a given period. So that itself, those kind of things, maybe if they have an intention, they can get into that, but that can be easily caught, of course, by going for the digital forensics and all. That can be caught.
Okay, thank you very much. I will leave it because there are other colleagues also who want to are asking questions. Thank you very much. I appreciate it.
Thank you, sir. And yes, sir. Navi sir, the CAT tools. Because we don't have big data where we have to perform in forensic on Google or those kind of things. So more or less, I'll be comfortable using Power BI or to a limited extent Excel as well. R Python, I might require maybe in that case because I might be having an overview but not an expert, so I might take an expert help if in case I have to. IDEA is also one such tool, IDEA CAT tool, that is also more or less. But what I usually do is I'll based on as I perform a particular audit, I come across certain triggers or certain analytical procedures. I document it and create my own macro, or because as I said, I'm a little probably little extra than regular users when it comes to Excel. So I might create a macro. I might create my own functions to perform that particular analysis. So otherwise, Power BI and Excel is much more sufficient for IDEA as well.
Even for applying this Benford law and other things, Excel.
Yeah, Benford law is also we can go for, because we have a function called log 1 plus 1 by n. That particular log 10 of that function is available in Excel. So that also probably what I do is in one sheet I'll dump the data. Second sheet I'll have a macro where it will perform the Benford law by first digit or second digit kind of thing. So that can be used. And coming to one more question is from Deepak Wade. Do you also collaborate with IT professionals to recover or gain access to transaction details stored on individual system? See, again, this is you are speaking about an investigation where if a system is seized, we were requested by income tax department in a couple of cases and GST department in a couple of cases where they have seized the system and they've asked us to perform. There again, obviously have to take IT professional, because the data imaging and all, though we have little idea, we can't risk getting into that. So they'll perform all the data imaging, what is the timestamps and all, they'll get the log and all. I'll say that I require these kind of backups, I require these kind of data. You extract that and give it to me. I'll probably take it in a proper documented form, and that way I'll keep away. So there I might require definitely IT professional help. Also, at what point would you stop pursuing a lead or means of obtaining information data beyond which it would be considered intrusion, violate a law? See, ultimately, we are doing this in and around the financial statement, because that's what we are trying to find out, what exactly the financial statement, to what extent they have manipulated, what are the areas they have fudged or whatever. So because that is the scope, I'll limit myself to a certain extent that to go back, we call a deep dive or kind of go back to the transaction level from that stage. So I'll be comfortable if I picked up a particular area saying that out of all these 5 to 6 ledgers where it could be related party or whatever, where actual kind of manipulation. So I'll be going to that and I'll go back to the transactions. Once I've identified and once I've formed opinion that these are the arranged transaction, I don't need to go because there is no, as I said, the scope limits saying that if any preferential transactions happen or any kind of extortionate transaction happens, so I know that this is the area where it can be. I can't get into expenses like advertisement expenses or where it's not the kind of scope. So depending on the scope, I have to limit. But if it is, as I said, a couple of banks, they started giving an appointment letter which is like a global forensic. I mean, there is no limit at all. They say each and every ledger, each and every transaction kind of thing. That's a challenge. Then in that case, either you have to accept that challenge, and you have to be very elaborative in doing 100% check of the final documents and the financial transactions. Otherwise, you can limit. And what techniques would you employ to gain access to his or her? See, I'll share one interesting snippet now that Navi sir is available. The data privacy has been the greatest challenge when it comes to forensic, because when it comes to forensic, especially the employee kind of frauds, we do profiling in terms of we identify what is the KYC has provided, what kind of lifestyle he's having, what transactions he's doing, and where he has worked earlier. Now, when we do this profiling and all, we have to go beyond the data available with the company. In earlier days, I mean, just to share, maybe 10 years back, I was in a position to get income tax return of any person, you name. Probably if Modi ji was filing, I could have even get a ID return of Modi ji as well at the time. So that was the kind of access what we had, because as you know, in the Indian system, you pay a certain amount to the clerk, he'll extract the relevant data. So that way we can get IT returns. I was getting the credit card statements, because we have a separate task force of various banks where all the risk managers will come together and they share the data, because a culprit in one bank could be also in other banks. So that way they keep open in terms of interacting and arranging the task force. So that way, because by virtue of the relation, I might get certain information of credit cards, income tax returns, any kind of PAN information, all those things. But now the scenario has changed, because everything is being tracked to log. I mean, some guy from Chennai is trying to get the information of income tax of a particular employee. It can track, the system captures saying that, no, this guy has queried on so-and-so date and so-and-so time from that particular IP. So that might even hit back. It might be, turning back onto me. So that's a risky thing. So that way, the kind of the privacy systems, the controls what they set up has been a greater challenge. But earlier we used to have an ample scope, because I couldn't produce that as part of evidence, because that is been generated through third party without any proper agreement kind of thing. But at least helps me to create a lead and probably to conduct an interview and get a confession letter from the employee based on the evidences what I have. To that extent, it was comfortable. But now, yes, it's we still can get bank statement and all, but it's difficult, and it's also very risky and very challenging. That's one. But otherwise, as you are saying, the techniques will be just to get the timestamp of his in and out of organization, what regularly his pattern of attendance, what regularly pattern of his activity in the ERP, from which IP he regularly logins, and what was the exceptional days he has logged into, what kind of transactions he was passing, and what are the exceptional transactions he was passing. Like in one particular case in Pune, there was a 70 lakh fraud, wherein a woman employee has used ID card of what you call the swipe card of other person who was absent to perform certain transactions. So that way, there's evidence saying that timestamp that guy is actually physically was not present, but timestamp has a swipe. So by conducting an interview, we come to know that that guy was not there. So likewise. So again, as I said, there is no proper scientific methodology. You might use scientific techniques and all. Techniques can be scientific, but the approach, depending on the case to case, you have to keep yourself open. That's the way you get actual idea about that particular case. And
can I add a word?
Yes, sir. Please, very much.
Now, as an investigator, it is always necessary to get an indemnity from the person who is appointing you. Okay, so that any responsibility will actually be transferred to the employee. That is the person who appoints you. Okay, that is first thing. Second, if you are going out of this system and conducting an investigation in external systems, then it is a law enforcement kind of an activity. So companies need to actually file an FIR and make it a law enforcement case. And we can ask the law enforcement to appoint us as our consultant, so that I am not expecting the sub-inspector to do all the investigations. I am capable of doing it, but I cannot get this the external information without having the authority of the law enforcement. So in the appointment, we need to actually get the proper authority from the person who is appointing us, the company, with indemnity, because we are consultants and we are doing something for whatever say fees we are getting, which cannot sustain a case tomorrow on privacy or anything else. So we need to be indemnified. And of course, privacy laws do give some exemptions as far as the investigations are concerned. But where the problem comes is most of the companies don't want to recognize this as an audit, and they want you to do it something like a friendly gesture. It is not
Exactly.
possible to do that. It
They're
has
worried about
document.
reputation. They're
Yeah.
worried about reputation, filing an FIR.
Yeah, they are worried about their reputation, but we are worried about our existence. Okay,
Exactly.
we cannot end up in jail tomorrow,
Exactly.
particularly with more and more privacy awareness.
Yes.
As you said, some other person who looks at the log, he will file a complaint, and that log IP address may come to your system. So
Yes.
companies also need to understand that they cannot put these external consultants in this awkward situation. So either they have to take the responsibility, or they have to somehow get things done through law enforcement, at least file an FIR and get a letter back from the FIR that please assist us in this investigation. As part of our law enforcement consultant, you please do this investigation, because police also take the assistance of private consultants. So that way also you can guard yourself against the possible consequences of these privacy violations, I suppose. It's
Yes,
just a thought.
very much. Very much. Indemnity is one, of course, crucial factor. But of late, as I said, this was the scenario 10 years back, and of late we stopped taking those kind of risky assignment where it comes back to us, and obviously, your survival is more important than any other thing. Survival in the terms, keeping up as a professional.
In fact, so many questions are coming for employees.
Yes, yes,
okay.
sir.
Now, one of the observations I made recently, which others like Ramesh and others will be interested, is in this US privacy law draft, which is the federal law, they are trying to exempt employees from that act. So, yeah, so they are avoiding this because problem comes only from the employees. So in EU, if you see, employees keep invoking the privacy laws and preventing this security related work. See, sometimes we work on suspicions. So we do investigations and then we say that, okay, this person is innocent. But then we don't want a counter case saying that you didn't have sufficient prima facie evidence to even start the investigation. So the question of taking permission is not there because that defeats the very objective of investigation. And secondly, insisting on this prima facie evidence, because it's all subjective. Say, I have a suspicion and I order an investigation. Tomorrow, if you want me to substantiate whether your suspicion was good enough to order an investigation, it is not possible to substantiate. I think even courts will have to understand this. Probably after this privacy laws come, there will be more of such debates, and forensic auditors need to protect themselves specifically by getting provisions introduced in laws, so that say if a sub-inspector can do this thing, why can't an accredited forensic auditor also be permitted to do some investigation? So quasi law enforcement status has to be claimed by this community. Okay. That is a thought. Okay, your association, ACFER, somebody has to start thinking about it. Okay.
Yes. There are a couple of questions. Should the employee be notified of the forensic investigation? Yes, couple of entities, they have this policy of taking if in case it is a review of his role during the transaction, like certain banks or entities has a policy of mandate leave, 15 days of mandate leave, where they say that during that particular process they'll have an what you call they can review, they have a right to review all the transactions and all that kind of stuff. Otherwise also obviously that is you can't override the legal rights what an employee has. So obviously it has to be, they can't be making a surprise kind of investigation. Of course, maybe low profile investigations and all might be carrying, but otherwise in a proper organization you can't override that particular this thing where you not notify employee. Of course, you may not say forensic investigation kind of thing. You might say an inquiry, you might say an interview, or you might say any kind of this thing, a polished way of communication. But definitely you have to, at least going by the ethics or going by the law, you have to intimate. Yeah, I think Deepak also has mentioned that when I was part of Big Four, they have a process of asking employees to face a compliance audit. Yeah, in this case, compliance audit is more of how roles have been performed, and no, it is limited to that particular. But forensic investigation might be beyond a compliance. I mean, obviously, they are suspecting some embezzlement, or they are suspecting something. So it doesn't limit up to there, and that's where the challenge is. To take a consent from that particular employee, and also keep yourself open. I mean, as I said, the kind of communication terminology what you use, and how you are investigating, and you can't go beyond your boundaries anyway, being a professional. It's a challenge, one of the challenge, but expertise and a proper communication, proper documents, these are the actual requirements of forensic accounting, to have a proper communication, to have a proper reporting skills, and this is very much important compared to regular, because you have to be presenting in such a way that is accepted in court of law, and also you are presenting in such a way that the confidentiality aspect is taken care, and you are communicating properly what your observations. That's the more challenging aspect, I believe. I think that's all, sir. At least thank you, Namit, thank you. So if in case we don't have any questions.
Yeah, thank you. And a new type of topic. Okay.
Thank you.
Good. Manju?
Thank you for explaining a very complex subject in a very simple manner and interesting manner. Thank you very much. And the discussions were even more interesting.
Yes.
Thank you everyone for participating and adding on to the discussion with very interesting questions. Thank you everyone.